Before we look at the price charts today, I want to set a little context. And of course, this is just Brian stating his opinion. If we talk about a geopolitical conflict in which there are two sides, we could dive down into that idea and look at the conflict from both sides' perspectives. And of course, each side would have their objectives that they were trying to achieve as an outcome of the conflict. And, that's what we're looking at now. I might suggest that these are the objectives that each side has. And furthermore, that until one or both sides achieves their objectives or comes to a mutual understanding that, okay, I'll flex a little bit here, you flex a little bit there, the conflict is not going to end. Despite any talk of negotiations, peace talks, ceasefires, etc., it's delay tactics, it's BS, is what it is. When the rubber meets the road, what's actually happening? The operational pace of activities has not decreased one iota. If anything, it has accelerated in recent weeks. All of the talk of peace and negotiation, it's all smokescreen. Enough of that. One of the items I came across in my reading yesterday is that polymetallic mining, which is where, I don't know, it's like 60% of silver that's produced, it comes from polymetallic mines, and primarily this is the mix that we get typically, copper, lead, and zinc. And then silver, you get a little bit of silver mixed in. One of the primary processes for most effective and efficient processes for separating these polymetallic minerals is sulfuric acid. I'll give you three guesses. I'll give you three guesses where sulfuric acid comes from. And so potentially the current geopolitical activities will result in a slowdown of silver production. That sets up a potential bottleneck at both ends of the supply chain. We've got above ground physical inventories of silver, COMEX and LBMA, being burned down at a very fast rate, and that hasn't changed. Nothing that has happened in the last 2 months has changed that picture. And now potentially we've got the refiners who will be constrained by a lack of sulfuric acid, a critical chemical that they need to do business. On to the charts. So gold and silver, my hesitancy with the metals right now is that silver is interacting with its 50-day moving average. And it's not obvious that it's going to overcome that level. Now, there are some bullish aspects of this chart, but given the bigger picture, the geopolitical picture, I'm not anxious to jump into this market with both feet. That's my feeling right now. Similar with gold, we've got a couple of weeks there, 2+ weeks of sideways consolidation, gathering energy. Now we're getting a push up into the 50-day moving average, but same comments about silver. I'm not confident that gold is going to overcome that resistance level, at least on this go round. We'll see what silver does. MACD on a buy signal, still in bear mode. Same in gold, energy elevated. So some bullish aspects, but the big picture has me leery. This is price of energy, natural gas, because we're headed into summer, we're out of heating season, so the price of natural gas is falling off, natural response to diminishing demand. What is of interest in this chart, West Texas Intermediate, WTI, has pushed down and tested the $90. If we talk about $90 as a round level, potential support level, price tested that level today. Buyers came in with a vengeance. Price got as low today as 86.96. and buyers have stepped in and pushed price all the way back up to 92, so $5. Anyway, this is a bullish action. This is a very bullish doji candlestick indicative of elevated energy and suggestive that price of oil is headed higher. And of course, that correlate with what I was suggesting about the big picture. Let's see. If we go back to here and talk about one of the stated objectives of this side of the conflict is a $200 price for oil. There's a bigger picture going on. In my mind, it's important to be aware of that bigger picture. And these guys want to see oil at $200 a barrel. We'll see if we get there. Clearly, equities are having a good time. What I would like to see, when I look at the chart of the equities, what I would like to see is real-time data on money creation. If we were sitting down in the basement of the Federal Reserve where the printers are, my guess is that they are currently running 24/7. And that liquidity has to go somewhere. One of the places it's flowing, obviously, is into the equity markets. Keep in mind that back during the geopolitical events in 2019, 2020, 2021, etc., I'm not going to name them by name, but during those few 3 or 4 years, there was $7 trillion in new dollars. We have to put air quote around dollars or money. It's not money, it's fiat currency. Anyway, $7 trillion worth of fresh printing press money created during that event. And my suspicion is that we have a comparable level perhaps even higher. I suspect even higher level of money creation right now. The nut-T trade has failed. We did get a test of that resistance level, didn't get a breakout. See, we never got price closing up above that resistance level. So we never got a breakout. The trigger on this trade didn't fire. And now we're seeing, prices dropping back. We could still get a bullish trade out of this, but didn't fire this week. In the 1 hour time frame, same thing. That, even down in the 1 hour time frame, we didn't get price closing above that resistance level. So again, this trade never triggered. That's the daily time frame. JNUG, which is similar, it's a 2x leveraged ETF on the mining stocks. It actually did get a breakout. Today we're getting a retest of that breakout. It actually early in the trading session. So be interesting to see where we get with JNUG today. But again, given the big picture, I'm not anxious to put my money at risk in a leveraged ETF. That's all I got, folks. Talk to you soon.